and markets flashing eerie echoes of 1987's Black Monday crash. The mayhem is already signaling another Black Monday. The carnage in financial markets unleashed by President Trump's tariffs is continuing unabated as equities get pummeled. In fact, the U.S. stock futures showing the over $11 trillion wipeout since Trump's first day in office is not over. S&P 500 futures pointed to a further loss of about 5% when Wall Street starts trading. From Sydney to London, investors bailed on any risky asset. Europe's main gauge, in fact, tumbling 6% into a bear territory, and Asia's index posted its steepest loss since 2008. The broad sell-off fueled already heightened fears of a global recession and raised expectations that the Fed would try to respond. That, despite the possibility of stagflation sparked by tariffs, would make it complicated for the Fed to do so. The current market crisis is driven by expectations of a recession from the global trade war fallout. But when global economies were set to surge, historic crashes were a result of recessions and economic downturns during regular economic cycles, albeit driven by extraordinary events. The most recent market meltdown in history was from COVID-led panic selling in 2020 to mark the largest weekly drop seen since the 2008 financial crisis. The week ending February 24, 2020, saw a decline of 12% for the S&P 500, 11% for the Dow Jones. On March 12, the Dow fell nearly 10%, the worst one-day decrease since 1987. On March 16, there was a further decline of about 13%. Nonetheless, by May 2020, the stock market had recovered sufficiently to reclaim its pre-pandemic high. In March 2007, the financial firm Bear Stearns shut and started an impending collapse of the stock market. By September 2008, meanwhile, the value of the major stock indices had dropped by approximately 20%. In 2008, the wider market first fell 30% and rallied on unprecedented global stimulus. But the market soon crashed another 40%. The Dow hit rock bottom on March 6, 2009, 54% below its all-time high. Complete recovery from the financial disaster took 4 years for the Dow. And the tech-heavy Nasdaq index had skyrocketed from 1,000 points in 1995 to more than 5,000 in 2000. Yet in early 2001, the dot-com stock bubble started to burst. The Nasdaq index hit an all-time high of 5,048.6 points on March 10 and then dropped 76.81% to a low of 1,139.90 points on October 4, 2002. It took nearly 15 years after 2001 for the Nasdaq to regain its 2001 high. And the biggest single-day percentage drop in the history of the U.S. stock market occurred on Black Monday, 1987. On October 19, the Dow dropped by a terrifying 508 points, or 22.6%. The majority of the blame for the carnage was placed on computerized trading programs. The market, meanwhile, managed to recover all of its crash-related losses within 2 years. The U.S. economy was heading into the Great Depression. The S&P 500 did not exist back then. The Dow's return for the full year, 1931, was a loss of 54% amid all the sharp drops in drama and faith-restoring rallies during the year. Back then, just when things were looking up, the market dropped 25% in a single week in October 1929. It swung sideways for a while until the 1931 crash. To stay up to speed with the latest news, download the WION app and subscribe to our YouTube channel.